Hey everyone, welcome back to Cashletics, where we turn your money into disciplined athletes that perform over time. If you're new here, hit subscribe and join the team. Most people want to build wealth, but very few actually do it. Not because it's impossible, but because they chase the wrong strategies. In this video, I'll show you why ETF investing combined with a solid DCA strategy might be the most reliable path to long-term financial comfort, without needing to pick individual stocks or time the market. Let's break down the 10 biggest reasons why. Reason 1. Instant diversification. An ETF gives you instant access to dozens, even hundreds of companies in a single purchase. Instead of buying Apple, Google and Microsoft separately, you own them all through one fund. That means less risk, fewer surprises, and exposure to entire sectors, not just single companies. Reason 2. Simplicity and automation. You don't need to track dozens of stocks or guess when to buy. ETFs let you invest passively. You buy, hold, and let time do the work. Reason 3. Perfect for DCA. Dollar cost averaging means investing the same amount regularly, no matter what the market's doing. Sometimes you'll buy high, sometimes low, but over time your average cost balances out. It removes emotion, which is what kills most investors' returns. Still, it pays to stay aware of the market. When prices drop, think of it like a sale. The same solid companies and ETFs are temporarily cheaper. That's when consistent investors quietly build wealth while others panic. Stick to your plan, but use those discount days as reminders of why patience pays off. Reason 4. Time is your greatest asset. The earlier you start, the harder your money works for you. Compounding means small, consistent investments can grow into something huge if you give them enough time. Reason 5. Low fees equals more returns. Actively managed funds often charge over 1% in annual fees. ETFs can cost as little as 0.05%. That might not sound like much, but over decades, that difference can mean tens of thousands in extra returns. Reason 6. Proven historical performance. Historically, broad market ETFs like those tracking the S&P 500 have delivered around 8 to 10% average yearly returns over long periods of time. That's better than most active traders and with a fraction of the stress. Reason 7. Emotional freedom from market noise. When you invest in ETFs with a DCA plan, daily news doesn't matter as much. You're not betting on short-term moves. You're betting on progress and time. Reason 8. Global exposure. ETFs can give you global reach. You can invest in the US, Europe, emerging markets or specific sectors. That spreads your risk across economies, not just companies. Reason 9. Dividends and reinvestment power. Many ETFs pay dividends that can be automatically reinvested. It's like getting paid to hold and then putting that money right back to work. Over time, reinvesting dividends accelerates compounding growth. Reason 10. It fits any lifestyle. Whether you're a student investing $50 a month or a professional allocating thousands, ETFs scale perfectly. You don't need to be an expert. You just need consistency. Thank you for watching. I hope you learned something today. Subscribe if you want to learn more about building your financial future. And I'll see you in the next one.